Welcome to VCC TV. India's biggest e-commerce player Flipkart is in the news again, but not for the right reasons. A recent set of markdowns has raised some serious questions about the company's valuation. And to find out its impact on the company, we are being joined by Vivek Sinha, the executive editor of VC Circle. So Vivek, what do the recent markdowns for Flipkart mean? Is it just a theoretical exercise as the Bansals claim, or does it really mean that the valuation is not what it suggests?
See, I won't say a lot of people talk about overvaluation for Flipkart, but that's not a correct word to use. So private companies are valued based on certain parameters, and e-commerce firms per se are valued based on gross merchandise value and how it is growing. So in simple terms, it is the value of sales that an e-commerce platform clocks in a month, and then is projected over a period of 1 year from there on. So the investors had valued Flipkart at a certain level based on how it was growing at a certain point of time. What the markdowns essentially means is that the growth rate is not matching up to that expectation. So that's what the markdown is about. So
will the markdowns necessarily impact when Flipkart goes out again in the market to raise another round of funds?
Sure. So the way to look at it is when the company's valuation comes down and it goes back to the market to raise money, it doesn't mean that if it wants to raise $1 billion, it won't be able to raise that money. Okay. All it means is that it would have to dilute more stake compared to what it would have liked to earlier.
Right.
So it doesn't impact the operations as much as the valuation of the company and how much stake it has to dilute in the next round of funding.
Do the markdowns reflect any impact on the e-commerce sector in India as a whole?
Sure. So if the country's largest e-commerce firm is seeing a degrowth or deceleration in its growth, to put it in a way, it's not only about Flipkart. It's not a Flipkart problem in itself. So if you look at what happened to Jabong, Jabong itself was asking for $1 billion valuation just a little over a year ago, and now Jabong's parent, a global parent which has 6 other ventures like Jabong, itself is valued at $1.1 billion. So it shows the pain point in e-commerce at large, and it's not only about e-commerce either. So if you look at how institutional investors have re-rated internet stocks, and they have not only sort of re-rated or brought down the valuation of only e-commerce companies, but also other companies which are related to internet. So it's not only about internet either.